Alright, you already know what this video is going to be about. Let's talk about CPI, okay? So the CPI just dropped. Basically, if you want to know about my expectation of the CPI, you can just check my previous video. I actually talked about it a little already, okay? Basically, I kind of got it a little bit on the point. I said that I was expecting 0.4%. Came out to be 0.4%. Okay. However, what I was actually a little bit wrong about was that the core came out to be 0.4% when I was kind of expecting it to be about 0.3%. Okay. A lot of people are expecting it to be 0.5. I was expecting it to be 0.3 personally. Okay. But however, the market still kind of rallied up a little bit yesterday after the CPI actually dropped, and then it kind of just flatlined out a little bit, and then it just went back all the way down. Okay, the market is crazy, but let's go through the CPI. Okay, let me just zoom in a little bit. Hold on a second. Here you go. Okay, let's go through CPI. Okay, went up 0.4% in April. Index for shelter was the largest contributor, exactly like I talked about, simply because shelter is a lagging indicator. Okay, so let me just open this a little bit. Yeah, here you go. Okay, so simply because shelter is a lagging indicator, usually when you actually see any sort of inflation coming into shelter, you would also only see it 9 to 12 months later. The reason being is because when you're buying houses, you are renting houses and things like that, prices usually do not change by the month. Okay, for example, if you're talking about rental prices, if today you're going to be renting out your house for, let's say, $1,500 per month, okay, when you sign this contract, this tenancy agreement, okay, that's going to be lasting you at least a year from now, okay, and then from a year from now, you probably will have to revisit that, and then you might increase it. For example, inflation hits, for example, when that actually hits, maybe now it's $1,800 per month, okay. So that $300 increase is the inflation. However, this is going to be happening throughout the year. Now, you kind of break it apart, and then you can see that a lot of people are renting houses every single day. Every single day, there is a new agreement that is being drafted for a different house. So all this kind of inflation kind of adds up. So right now, we're getting the full brunt of it for the entirety of index for shelter. Basically, we're getting a lot of increased prices throughout the year. So for the whole entirety of 2022, we have been getting a lot of high prices, okay, which is why right now we're still at the high prices part. However, like I said before, I'm expecting probably in either August, September, October, during that period of time, most likely that's when we actually see the gradual decline. Okay, that's when people start to renew their leases, and when those leases are going to be coming down in price. So, for example, maybe during that time, I might be dropping my rental price back to like when 1,005, I might go up all the way to 2,003, and now I'm gonna go back down to about like 1,007, for example. It's still gonna be an increase, but now you kind of want to wait for it to kind of trend downwards. That's why I'm saying that largest contributor to inflation. Okay, you can also see increases for used cars and trucks and index for gasoline. Okay, that's something that I actually did not actually get right. Okay, I'll be for real with you guys, because I was expecting used cars and trucks to actually go down a little bit, but surprisingly, used cars and trucks actually went up. If anything, new cars and trucks actually went down instead. So used cars and trucks went up a little bit. Index for gasoline also went up a little bit. But for gasoline wise, I think, because right now, if we're looking at WTI prices, we're looking at fuel prices in general, Brent oil, all of them are kind of going down a little bit. So I think the May index that we're going to be getting in June, that's most likely going to be seeing a tune downwards, which is why I'm most likely going to be predicting that the CPI that's going to be coming out for next month would be somewhere in the 0.1 or 0.2% month over month range. But of course, until I actually read up more on it, I cannot really confirm. Okay, so over here you can see core actually went up 0.4%. Okay, of course, index increased, includes shelter, used cars, motor vehicle insurance, recreation, household furnishing, operations, and personal care. Okay, so kind of what we kind of expected, let's be honest here. Okay, so decrease over the month is airline fares, and I thought that airline fares kind of makes sense for airline fares to kind of go down a little bit, but I don't think it helped that much personally. Okay, but over here you can see throughout the whole entire year, I was talking about this. Okay, April 2022 we got 0.4%, and then May, June is where it actually hits the hardest, which is at 1.2% month over month. Okay, so basically what's going to be happening is once we hit June of 2023, or actually July of 2023, that's when we actually see inflation basically just disappear. Okay, because May is going to be a huge hit because the previous May was 0.9%, which means that it's still going to be part of your year over year calculation. June is going to be 1.2% month over month. Similarly, still going to be part of your calculation. Once you hit July, on the other hand, you can see July onwards, we actually had a huge recovery. Okay, 0% for July, August was 0.2, September 0.4. Basically, your highest was in October and January, which is 0.5%. Okay, nothing that crazy because even if you were to annualize it, you're only looking at about 6%, and that's if you annualize it. If you actually put it year over year, chances are you're going to be looking at what, like 2.8%, at the best, what, 3%. So I think that when we actually hit July, chances are we're going to be seeing ridiculously lower down inflation. And of course, we have to talk about this a little bit as well because the Federal Reserve, they don't have to give us the low prices. Okay, they're not promising low prices. They're only promising stable prices. Okay, just treat it as it is. During the April of 2022, the April, May, and June, those were not stable prices at all because, for example, if I'm going to be buying eggs today at like $1, okay, effectively in May, it's going to be $1.20. And then in June it's gonna be like I don't know, like $1.50. Those are not stable prices, for example. Okay, what stable prices is what you actually see all the way from December, okay, all the way till April here. That's what you kind of call stable prices because you kind of have like highs, you kind of have lows, but ultimately when you kind of average them out together, you're looking at about like 0.3% month over month on average. Which, if you would really want to analyze that, you're looking at about like 3% or so, which is not that bad. Okay, so that's basically it for that part. Okay, right now we want to look at some of the wording for it. Food index is remain unchanged. Okay, this is going to be huge because last month we actually got the first time since 2021, I believe, that the food index remained unchanged. Okay, the previous month it also remained unchanged. This month it remained unchanged, and it's huge because food index in general has always been going up and up and up, which is why I talk about inflation a lot on this channel because I think food inflation is going to be the biggest problem that we're going to be having in the next 10 years. Okay, if food inflation continues to go up, it's going to be hurting the lower class, it's going to be hurting the working class. The middle class, not as much. The middle class onwards, all of them are pretty alright with food prices going up because chances are they can really afford it as it is. But for the working class and also for the the working class and also the lower class, they are the one that are actually counting the money for the food that they actually buy, the food that they buy outside, the food that they actually cook, things like that. All this minor increases month over month is going to be huge when you actually spread it out for like 10 whole years. Okay, so I'm glad that we are starting to see disinflation happening for food. But of course, I do hope that we actually see deflation. But like I said before, the Federal Reserve don't really need to give you deflation. They just need to ensure disinflation comes in and lower the huge increase of inflation down to 2%, and their job is kind of done. Okay, so you can see energy prices actually go up 0.6% in April after decreasing 3.5% in March. Again, like I said, this increase is not really that huge of an issue simply because we already know prices are down right now if we actually look at gas prices. So if we already know that prices are already going down, it kind of just increases the how calm you will be when the prices actually does hit, because the things that you already know that it's going to be going down. So chances are we are not afraid of inflation for energy going out of whack. But of course, it could easily happen where it kind of still increase to what it may be in the next few weeks. Okay, for example, in the next few weeks, if energy prices were to go up, of course, chances are we're still going to be seeing huge inflation for energy prices. But as of now, we're expecting low prices. Okay, so over here, yeah, airline fares went down by 2.6%. Pretty alright. Alright, now let's get down to the charts. Okay, let me lower myself here. Here. Okay, let's talk about the first, energy. Let's talk about energy, 0.6%. I think, that, like I said, expected. Used cars and trucks went up by 4.4%. Okay, this is where I was actually a little bit surprised. Okay, let me just... open up here. Okay, yeah. Used cars and trucks went up by 4.4%. This is actually where I was a little bit more surprised, okay? Because I was expecting used cars and trucks to be somewhere along the same region as the new vehicle, which is at negative 0.2%. Okay, I was expecting that to for used cars and trucks to be somewhere along those region, but there was a huge bump up. Okay, so when you have such a huge bump up, it actually comes with two different possibility. And of course, I think this is going to be boring if I were to say it myself, because it's either going to go up in price or it's going to go down in price in the next month. Duh, obviously. But the thing is that if it actually goes up to 4.4%, okay, I don't see any secondary reasons out there that used cars and trucks are going up in price. So chances are it's only for this month where there's a lot more sale in price in your used cars and trucks, hence the inflation of prices. For example, it could also be that people are saving a lot more money. Now they finally got the money and then they're starting to buy, they're starting to spend. Okay, so when this actually happens, it means that, of course, when people start to spend, that means more demand. If demand is slightly higher, or at least slightly higher than before, supply stays the same, of course, that means that prices would eventually go up. So it would also mean that, for example, in the next CPI report that we actually get, if we were to see used cars and trucks kind of go down by 3%, for example, like over here, you can see it went down, when it went up 4.5% over here, it went down 2.8% immediately after. The next month, down 0.9%. It kind of just gives back almost immediately, because how cars, new cars, used cars, all this kind of thing, usually it's a give and take. So I'm not that concerned. I was just expecting it to kind of go even lower. But of course, there was a bump up, not really too concerning. If the next month we still see concerning numbers like 3.5% or 4.5%, things like that, of course that's going to be concerning. But of course, if next month we start to see like negative 2.8%, negative 3%, then I think that's completely normal. I think that inflation is not going to get too much of a hit from used cars and trucks. Okay, and then finally we look at shelter. Okay, shelter, like I told you before earlier, I think shelter going up by shelter went up by 0.4%. 0.6% was rent of primary residence. Like I said before, rental is very, very close to shelter prices as a whole, which is why shelter prices went up by 0.4%. Kind of expected. I was expecting it to actually go up even more. Personally, I was expecting shelter to even go up to 0.8% personally. But right now, 0.4%, that's fine. Chances are next month we're going to still see it like 0.4, 0.5% again. Shelter prices is still going to be persistent just for a little bit longer before it start to trend downwards. Okay, and I think basically after all, the rest is all done. I think, oh, okay, there's another one. Which is just shelter actually. Never mind. I was going through this whole entire report yesterday, and I was just wondering what do I actually want to go through, you guys. But yeah, anyway, basically that's all for the CPI. I thought that it was pretty alright. Nothing that was really concerning that came out. Nothing that to actually tell us that inflation is gonna go out of hand, or big deflation is gonna be coming overall. Generally, I think that we are slowly going to be reaching the point where inflation just get rubbed away, okay, and then eventually we're just gonna have 12 months of very, very stable inflation, and then Jerome Powell's just gonna come out and just say, "Yep, we have done it. We managed to get 2% inflation for the long run." That's kind of what they were dual mandate to do, because they have to get maximum employment and also stable prices around 2% inflation for the long run. Right now, they're very close for the second one, because right now, most likely, they will take about another 5-6 months, and they should be completely done. I think 5 to 6 months, if they can actually get, well, actually, they don't even need 5 to 6 months, to be honest, because just getting past to July, they should be good. I don't think inflation is going to suddenly just pop up again, which is why chances are SCP that's going to be coming out for the next FOMC meeting, chances are we're going to be seeing some rate cuts happening. But that would be explained in more detail in another video coming very, very soon. Thank you all for watching, and see you guys in the next one. Bye.